Here we are playing both these companies which are into exports, both in service as well as in manufacturing. But the services oriented export is predominantly into IT sector. Right now we are not fully invested into it. We will wait for the right opportunity, because right now, given the slowdown in US and Europe, IT sector is going to go through a lean patch in terms of earnings growth. Let's shift to the other segment, manufacturing exports. Here we see a lot of opportunity coming through. India has not been doing really great from an export opportunity point of view for a long period, because we have been losing our market share to Asian nations or even to some of our neighbors in sectors like textiles and even auto sector also to say. But if you look at specialty chemicals, India has been consistently growing and gaining market share, because here we don't compete with our Asian countries or even with our neighbors. Here we compete with Europeans or Japanese or Korean companies, or to some extent some of the Chinese companies. When it comes to purely playing the labor cost advantage, India probably has not been very successful from a long-term perspective. There are patches in which we have done really well from a short-term perspective. Whenever the raw material prices have been conducive, or whenever there has been a supply chain constraint in other countries, we have done well. But when it comes to sectors like specialty chemicals, we have offered not just only labor cost advantage, but also low cost R&D, which is very important. See, every molecule that an agrochemical company sitting in Europe is identifying, they spend a lot of money, and they also want a company to participate in the process of identifying these molecules also. So each of these molecules go through multiple level of synthesis. So if you have an Indian company who can participate in some part of this custom synthesis, and then when these products go commercial, also participate in manufacturing these products in a bulk quantity, the Europeans are really looking for such opportunities or such companies in India to outsource a lot. And given that China has been continuously creating supply chain bottlenecks in chemical space, and particularly chemicals which are facing pharma sector or agrochemical sector, which are very, very important from a global perspective, there I think Europeans have started moving more towards India, which is what China Plus One story is all about, which looks like a very long-term trend, and it is just getting expanded. So let me take an example of Navin Fluorine here. The company started as a fluorine chemistry company, but of late in the last 5 years have started becoming a meaningful player across agrochemical, pharma, as well as new age application for fluorination chemistry. So you have a company which is good in fluorination chemistry, but now finding opportunity under various end user sectors. And the company which used to just do around 500 crore of capex in the last 5 years on an aggregate basis, today we are seeing that he is getting large projects by which he is spending 500 crore capex every year. And this is primarily because the European companies are finding it comfortable, or US companies are finding it comfortable to work with a player like Navin, and also given that the capability that Navin brings on the table and capability to execute these projects and deliver these molecules at the lowest cost possible, in addition to participating in also reducing the cost of manufacturing these molecules for these European and US manufacturers. So these kind of companies we like, and there are many such opportunities that we see coming through. In addition to it, as Europe is going through this energy crisis, their cost of manufacturing is increasing. So we are trying to identify certain specific companies who have a good presence in Europe. We are already researching into some of these companies, but we are waiting for the right entry point in these companies. These companies are typically companies who are having a presence already in Europe, and they are competing with European companies, and they can offer a low cost advantage, because the European competitor is going to see at least 5 to 10% increase in cost of manufacturing due to the high inflation driven by the energy crisis that is happening in Europe. So we are looking at further opportunities like that in the manufacturing space as well, which can be in auto sector, or which can be in capital goods sector, or it can be in any sector. But the key is that the company's balance sheet should be good enough that they can make use of this opportunity, invest into it, and they already have presence in Europe, so that they can just go and capture the market there. So that is what the opportunity is, and we are looking for such opportunities, and there are quite a few companies here, but we are looking for the right entry point into some of these businesses.